The broadcast is now starting. All attendees are in listen-only mode.
All right. All right. Good afternoon, traders. Happy Wednesday. Already welcome to the middle of the week. Welcome out to the Tradespoon live trading room, stocks and options closing bell. My name is Scott. I'm the head trading coach. I have been trading for a while, teaching for a while. These are the disclosures. Be careful. We're not advisors. This is for education purposes. Yada, yada, yada. Market like a yo-yo, right? Although I did say amidst the unfolding banking situation, I don't know if do we call it a full-blown crisis? Is it already a crisis? Is it going to be? Is it going to get worse? Is it stabilized? I don't know. Remains to be seen. With the banking environment concerns, the Fed would only go a quarter of a point. I thought a quarter of a point. So it makes sense. And that's what we got, quarter of a point. Those are the disclosures. This is Yahoo Finance to help us understand. You can see the yo-yo is right. We started negative and then we went slightly positive. And then we went back to negative, and then the Fed came out and we're like, yeah, hoorah, quarter of a point. And he says, maybe hikes nearing an end. We may be about done. Possibly having to look at some liquidity solutions like they've already had to do to some extent with some of the banks. But that initial reaction didn't last long. Let's take a look before we go any further. Whoa, that VIX. Tell me, raise your hand if you're concerned by what you see here. Yes. Metaphorically, I mean metaphorically. That's concerning. We'll talk about why. This is concerning to me. This is like, oh, goodness gracious. XLK makes new highs. Look, LK, you're not wrong. You're not wrong. And happy Fed Day back to you. Good afternoon to you, Phil. Hello to you, Raymond. And hi, Bill. Thank you for saying hello. I appreciate it. It's good to see everybody. Hope you had a good weekend, even though it's already Wednesday. I feel like, oh, we just had the weekend. But realistically, we're like more than halfway through the week. The XLK has been, like we noticed, strength in technology, but that was about it. We weren't having it in financials, obviously not financials. We weren't having it anymore in industrials or in consumer discretionary. Even the only other place that we saw hints of it was the communication services. So, and we said that technology can run alone. It can be a lone wolf. No one else can, right? You can't be like, oh, look at industrials leading the market by itself. It's got to be industrials and financials and a little bit of something else, right? So, but technology can just sort of run, and then the market just sort of hangs out, and it can be an interesting environment. Yeah, this VIX is concerning to me for ongoing, continued escalation. We had this little kind of turn, this whipsaw. This was tough to read, right? I mean, maybe you got into something. It had a bullishness, but at the end of this run that we've had, and you can see clearly the volume is diminishing, the buyers losing steam as we go higher, and unfortunately for me, it really just sort of fits right into the line of consolidation, right? If I'm playing some connect the dots, we had a lower low here. And now what appears to be developing a lower high, right? A lower high. It's down here. We're bumping the underside of the consolidation line. We are at a critical point. A critical point that very easily could trigger. So I still have some hedge. I said I took off some in this area when I got 5% drop from the hedge, 5%, took some, still have the rest of it. So that's on. This would trigger a new, and we're going to go back to the VIX, but this lower high would trigger with a confirmation from the VIX making a higher low, would for me trigger standalone I'd call it a hedge, but right now it's maybe not a hedge. If you have a bullish portfolio, if you have a number of bullish trades on, then yeah, it's a hedge. You're hedging that, because especially if you intend on keeping them. If you have a balanced neutral portfolio, some calls, some puts, a little bullish, a little bearish, maybe some neutral trades, then it becomes more speculative. It's more speculatively to the downside, right? So if you have a delta neutral and you're adding negative delta to it, you're turning it into a more speculative to the downside bias. Whatever it becomes, and you may already be bearish and it may be increasing the bearishness, right? But it is a triggering event for me. And so, yeah, I'm super concerned by this. Now, for a minute there, let's erase this. For a minute there, we don't know how we're going to end, right? But it looked like this. And when it looked like that, you'd be thinking, hey, all is well. But all is not well as we watch this thing come into the end of the day. Let's look at the 5. How's everybody feeling? How's everybody trading? Oh, yeah, look at that. We're going to just jump into the quiz show contest, and then we'll go back to our normal routine. So it was like the announcement came, positive reaction. Then they're like, I don't know, are we sure? And then Jer Bear starts talking. We're getting close to an end. Everyone's like, that's good. And then all of a sudden it's just like, wait, are we sure? And we give it all back. And so that's concerning right there, right? Okay, where are we going to finish? This is a tough one. I'm going to go $2 wide based on the volatility we're experiencing. Above 398 A. Between 396 and 398 B. Anything under 396 C. A, B, C. Where do we finish today's market? Let's go ask Stella as the answers come in. I sometimes forget to do this, but let's see if she has an opinion. And we will come in here. Come down. Ooh, she thinks it's chopping all the way back up. Getting it all and closing closer to the top. That's an interesting prediction right there, right? I don't know that I've ever seen. Now, admittedly, I don't look at this type of a perspective that often. I mean, I'll go in during the day sometimes. I don't remember ever seeing something where it really says it's going to make a run, it's going to test, and then it's going to finish strong. I could definitely see that. Stella's an A. Come on, where's everybody? Brad's a B. LK's an A. Bill is a C. Bill's like, what is she smoking? Okay. What? But look at it. You know what? I'm going to ride with Stella today. I'm going to go an A. Me, LK, and Stella. It's going to rally. It's going to get up here to about 398.5, just a little through, and then it's going to come back, and then it's going to just meander, and then right in the last 5-7 minutes, bing, 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 it's going to pop. That's what I think. Raymond says, hey, we're going with Stella. Stella knows. She senses it. Okay. Let's go back. Let's go back and talk about what's going on. Because there's, right? The Fed came out. I mean, don't fight the Fed. That's good advice. Don't fight the Fed. The Fed is saying the banking system is strong, which in my opinion if I can opine, in my opinion, means that they are willing to intervene / organize interventions. Carmen is a C, she says. Thank you. Hello, Carmen. It's good to hear from you. I hope all is well. Raymond is an A. I think I said that. But if the Fed is willing to step in, I think we're going to get through it. Is there going to be more concern? Maybe. I mean, obviously, from the Fed's perspective, the less public hysteria there is, the better. So they're going to try to keep it quiet if possible. I don't know. I think we'll see. I would have to tend to agree. So don't fight the Fed. Fed says 1/4 point. Fed says we're almost done. Okay, we can live with this. It's not like everyone's like, oh, we're going to be back in the 1980s and we're going to have 16% mortgages. And it's like there's just always this knee-jerk hysteria, so reactionary in such an unnecessary fashion. So, yeah. Okay, so here we go. If I can get back to my Yahoo, there we go. All right. And anything else going on? That's the big thing, right? Fed. Shows rates peaking at 5.1%, nearing an end. The banking system is sound and resilient. Now they have to balance the pressures of inflation, mind the banking crisis, and still hopefully have a soft landing. And so the Fed's got to, and this is with such an enormous economy. You know, it's so easy to second guess the Fed. That's a tough job. That's really about it. Goldman sees encouraging sign in banking crisis. I haven't had a chance to read any of these, but as you skim it, you're getting a flavor of what are traders, what is the market looking at. So we're looking at the Fed and we're looking at the banking crisis. Well, the Fed just gave us what we wanted, and even still, there is concern. And if that concern is confirmed tomorrow, and I'll talk about exactly what confirmation I will be looking for, I'm definitely leaning to the bearish in the short term until it shows me otherwise. Because whatever else we are hearing about and thinking and feeling, at the end of the day, it's got to be reconciled with what you're seeing. So that's what we're looking to do now. What do we see? What's happening? That's about it for the news. Let's look at the calendar. Obviously, this was the big news. That was basically the only news. Interestingly, an uptick in home sales. I was never that concerned. I mean, we all knew that it ran too hot for too long, unsustainably. There's going to be a consolidation, and it has, right? And it has. But the rest of the news, yeah. So it was. I found that to be interesting. So I think we may not see much more now that they think, if we know that the mortgage rates more stable. I mean, there's just a lot of things that will help bring stability to that. So that's interesting. Tomorrow, jobless claims expected to be back under 200. Labor market staying fine. New home sales expected to drop. What did we just have? Existing home sales, new home sales. New home sales may drop a little. We'll see. Still pretty ripe number. That's really about it for the rest of the week. So we're going to be writing the Fed news for the most part. What does Stella see? Let's go back to the bigger picture here. Let me get rid of this. And let me go back to today. Yeah, so there you can see. Now, a little bearish in the beginning. And if this starts to confirm, here's what will happen. So I'll tell you what happens with me. I would still, on the VIX, if there's a confirmation on the VIX of a higher low, that is like just about as automatic of a trigger for a bearish trade as I can get, right? It's absolutely like, boom, I'm going to put it on. I still have some from before. I recently took some profit from some. That hedging, I call it hedging activity because its primary objective is to get a nice piece of protection in place when we're feeling a little complacent in a bull market. Like that's the primary job it plays. But I find it to be equally effective, even if I'm not necessarily hedging, but if I'm adding some bearishness to my portfolio when I was neutral. So I'm actually speculating bearishly. Same trigger, same idea. So because, if this happens, this could easily turn into this. That's nice. If that happened, what that would look like? Let me go back to the VIX for just a minute now. So we did have this little gap up here right at the end. So if it turns, that's a lower high. But if we only drop down to 390 and then we turn again, okay, what do I have? Well, I have a head and shoulders pattern right there forming. I have a neckline. Oops, a neckline right through there. Yeah, that higher low is enough for me to think, all right. And you might be thinking, you're just chasing the market. I'm not chasing anything. I'm adapting to the market as quickly as I can with a very controlled amount of risk. That's the key component here, right? If you find that you're like, oh, I take 10% risk all the time, that's crazy, right? That'd be like you're playing poker and you just always bet the same amount. It doesn't matter who you're playing with. It doesn't matter what your cards are. It's like, there's no strategy in that. Come on, right? Better market, risk more. Worse market, risk less. Makes sense. And so, I'm not chasing it. I'm saying I'm ready to have something in place when a big move happens. If there's going to be a big move down, turning over tomorrow to the downside is going to start it, right? If all of a sudden this thing just took a dump and we're down here, you're going to be thinking, why didn't I get in back there? So you have to be thinking about that now. At the same time, I have to recognize what the model's saying is it may turn. So I have to be ready to adapt. If I have bearish positions and it drops some, I might squeeze a little profit, take them off, put a bullish trade on, ready to go. Perfect. Right? If it doesn't go that far, I might break even. Okay, I'm willing to break even if I'm able to get into the next bullish trade. We've been talking about this. There will be a time when we get a pretty good sized pop to the upside simply because the institutions are sitting on cash, piles of cash. It's there. They have powder in the keg. So if they're like, all right, this is what we've been thinking about. The Fed looks good. They're stopping raising rates. There absolutely could be institutional money who basically said they're going to wait until the Fed is done raising rates and then they're going to start buying. So the beginning of that wave may be coming in. They definitely establish conditions where they're saying, all right, we're going to sit on the cash until this, and then we're going to move in. When that happens, there's a lot of cash. So there could be some pretty significant initial waves. I don't want to watch the first two big waves and be like, oh, now I'm convinced. So in order to not be behind the market, you have to be willing to look like you are to some extent chasing one side than the other. There's a bit of a, Raymond said at the beginning, it's chopping up and down like a yo-yo. All right, do the best you can with the risk you can handle until it establishes something. But I'm going to be in it. Right? If the cards aren't good, I can't walk away. I got to keep playing until they get good. That's what I'm sitting here for. So there you go. All right. So now let's go talk about the VIX. So that is the SPY. So do I look at this and think it could easily only come down and reestablish some support anywhere from this 388 to 390 level? Absolutely. I would love to see that happen. If that happened, I would, shut down my hedges, add some bullish trades, adjust my neutral trades, and be ready to go. Let's go. Give me something that I can sink my teeth into And there's two different things developing potentially as we speak. So I say this a lot. If you want to be right, have more than one idea of what might happen. Okay. So the VIX, let's just jump right to that. I know I'm jumping around today. Now what? Now all of a sudden it's come down more, even still. So it looks like the market has gotten a little bit more bullish, even still. This is my last point down here around 18.5, we'll call it. It went a little lower, but the body's 18.5. We're at 20.5. That's 2 points. That's 10% more. We're down 4% today. So if this thing all of a sudden, if tomorrow we just have a pause and the market doesn't do anything, and then Friday is a bearish day, that's going to happen. And just like that happened there and triggered this, that's going to trigger potentially something where we do get back up into the low to mid 30s is the next range in a VIX escalation. So if that happens, you're either in it or you're watching. We walk upstairs, we fall out windows. Right? So if that's the case, you don't have a lot of time to be like, I need a little more confirmation. It'll confirm you right out of the trade. It's there or you're watching. That's why we have to be so willing to kind of get on one side and talk about what would it take to shut it down and reverse it to the other side. That's the market we're in. Or you're day trading. Vlad is doing a number of earnings-based trades. There's a strategy. You got to make sure the strategy that you want to put into place makes sense with the conditions of the market, right? What is the market? That's why we go through this routine every day to start the day. What's moving the market? What are the trends? What are the support and resistance levels? What's the volatility tell us? Where's the money flow in sectors? We talked about Excel. Those are all the signs, the hints that we throw in the pot. And we see what kind of soup we make. And then we say, all right, now we trade. We don't decide what to do. The market gives us the information we need and we process it. And then we say, okay, thank you, market. Thank you for the info. Great. Where was I? Yeah. Let's see if it replicates on the other markets for some confluence. Even more so. Calling for the pullback, but a mild pullback, almost a bear flag pullback into a push to the higher high. We've seen strength in technology, and the model forecasts ongoing additional strength, ongoing strength for the NASDAQ. Technology is definitely a leader. The Dow, not as much. And then, of course, the small caps have really been lagging. So you can see the Dow is actually looking for something up and then a big move down. So quite a difference there. Very interesting, that difference. But for money to flow into the NASDAQ, where's it going to come from? Anyone who's been defensive, putting their money in the Dow might start to make that type of a shift. Lastly, let's look at the IWM. Yeah, right. Still just kind of small caps. I don't know what it is, but the small caps really have struggled. And you can see even here, the rest of the market's moved up, and this thing just looks like a bear flag. It looks like it wants to drop and retest down at these old lows. If you are leaning towards something bearish and you're thinking, what? Well, obviously, there's still potential in the banking sector if that gets worse, the financial sector. Small caps, but I'm not going to try to find a small cap. I'm just going to trade the IWM. It's got good options. So I have small caps. Yeah, there you go. Okay. What else do we need to do? What's happening here? Oh, it's going to be a tough one, but you can see we would be looking for one small drop over the next little bit and then a rally. So I think it matches, right? I think it matches. If we get this little consolidation down for a higher low and then we go, could the market do this kind of a thing? Oh yeah. Okay. I'm open to it. That's what I'm saying. some people will accuse me in the room. They're like, "Oh, you're always bullish. You're always bearish." But I don't feel like I am. I am what the market tells me to be. So when it was not good, I was like, "Yeah, this is bearish. Negative scores, nothing here." Versus saying, "Hey, look at this." So, am I saying I'm bullish right now? No, I would say I'm neutral still. Neutral, maybe even I was on the bearish end of neutral. But I will say this: I see setups that I've seen before that develop at certain times. If I see these setups, do they always turn into a bull run? Nope. But do most of the bull runs that I see start with something like I'm seeing in the setups? Yes. So I need to be aware of it. I need to be open to it. Here's today's map. That's not today's map. Here's today's map. Technology, semiconductors still looking strong. Our two favorites. These are the two that we've keyed in on, NVIDIA and AMD, right? We moved away from ADI. We moved away from Marvell, but we definitely identified NVIDIA and AMD as our top two. We've liked Microsoft and Apple. So this is where some strength is. We've also said communication services, only Google and Facebook. And who's this? Match Group. I'm not sure about that. Entertainment struggling, right? You can see financials still struggling. We said that the strongest of them were credit, and Visa and MasterCard were the strongest of those. But the sector's really getting just pulled down across the board. Energy's not doing so well. Real estate's not doing well. Utilities struggling. Materials. We actually saw a little bit of momentum in materials, and we said industrials have slowed down. We said consumer cyclical hasn't been showing much. So it's really a mixed bag. Like, where's the money flow? Where's the money going? If you have any thoughts, if you want to give me your opinion or where you're looking for trades, put it in there. I'm going to do a quick sector rotation, then we're going to go through the watch list. Let the market chop around a little bit more. Okay, so 200 days, about 9 months, approximately. Leaders at this point is industrials and technology, right? Staples, healthcare, those are more defensive, a little behind that. There's the market. And then down here, communication services, utilities isn't so good, discretionary, materials, energy, right? It's shifted, but I mean, you can see that overall it's been kind of sideways in this period of time. But sideways is okay when you think about the fact that we know 2022 was down, right? 21% for the year on the S&P. That was a bear market. And now when you look at the last 9 months, you don't say, look how bearish that is. You say, oh, look how sideways that is. It is, right? That's sideways. And so as you look at that, you can see as it's turning that sideways way, but it's sideways with growth sectors starting to lead, whereas during for a while it was only energy plus some defensive sectors, right? As we zoom in and we analyze how the momentum of institutional money flowing into the sectors has shifted, what do we see? We still see sideways. 6 months, mostly sideways. Who's leading? Still technology, still industrials, which have been two strong ones. Energy's kind of moving back into a position there. There's communication services. So we're seeing that strength. You can see that down here, discretionary really struggled in that time frame. Utilities not so good. Financials struggling. We shift again. The last 3 months, what have we seen? Now, all of a sudden, the last 3 months, you're like, look at communication services, showing a lot of strength. Look at technology, strength, discretionary. So as we still overall a lot of sideways, but all of a sudden some positive. So trying to move into a bull market, who would need to lead? We would need multiple sectors. Well, you've got communication services, you've got technology, you've got discretionary. Okay, that's promising. If we have all three. Now, of course, for a little while, we thought financials was going to participate, and the financials is starting to really, obviously, is a drag. It's an anchor on the market. But even still, right? Industrials has lost some ground. Staples has stabilized. Energy's picked up a tick. Materials have picked up a tick. Healthcare is down pretty low. And then we just look in the last 22 days, over the last month, what do we see? Do we see more of the same? And the answer is actually still yes. We still have technology leading, right? So good recognition, technology, XLK. We still have communication services. Things have gotten a little dicier. You can see financials has really struggled. But overall, I think we look okay. It would be nice to see if we think it's going to get bullish. We would need something else, whether it's discretionary. I don't think it's going to be financials, but a discretionary or industrials. If we see this turn into something more bullish, I think we would see one of those start to participate. So if I'm bullish, where am I looking? Obviously technology, obviously communication services. And to some extent, I'm going to be keeping an eye on industrials, and I'm going to be keeping an eye on I'm losing my train of thought. Industrials and consumer discretionary to see if I see any momentum coming out of those. All right, let's get to the watch list. Yeah. Ooh. Let's look at that. See how nasty the IWM looks? It looks nasty. It's not looking great. Every time we try to recover a little bit. Oh, look at that. It tried to recover. I did say about 399. We got to 399. We turned over. Okay, so if it can stabilize here and then rally into the close, that's the ticket. What was our number? 396 by 398. So right now it's firmly in B territory. Brad is riding in front, envisioning the gold medal hanging proudly around his neck. Okay. Oof, I don't know. Look at that. I mean, anything, it could end up anywhere. That's the point on a day like today. Anywhere. All right. Exciting stuff. Let's get to the watch list. Shall we? We shall. I do want to adjust some things down here. Okay, let's get to the watch list. It's gone quiet out there. Everyone's still with me? Does anyone disagree with any assessments I made today? Agree, disagree? It's gone dark on me. Alcoa. Now that looks like a bear flag right there. So if you're out there and you're like, Scott, I disagree, I'm still bearish. Well, you're getting bearish signals, my friends, on some things. But this is a heavy drop, minor recovery. Now the stochastics is still moving forward, but you definitely have a bearish engulfing candle and I would call that a flag confirmation, right? Whoops, come on. If I drew my flag like that, yeah, that's right on the bubble. Maybe you would say it's still in. Maybe you would look to take that, enter tomorrow if it pops down into this zone, something like that. That looks bearish right there, right? Absolutely. Now let's look at what Stella thinks. Does she agree? Alcoa. Oh, Carmen is still listening. She said it's very interesting. Thank you, Carmen. I think I maybe put a few people to sleep. Alcoa. Oh, see, look at that. The model thinks Alcoa is going to smash. I don't know. I'm not seeing that. So in a disagreement like this, when in doubt, sit it out. This is definitely looking like it's struggling to get moving off of these lows. Interesting. Very interesting. I would not have expected that forecast, quite honestly. Della keeps me guessing. Apple. It's strong, right? If you liked this trade back here, we talked about this little pullback, higher low turn. You're probably still in it. Now today you don't love because it's a little bit of a falling star, shooting star candlestick pattern, but that was a good trade. Was anybody in Apple? Did anybody trade Apple? Still in it? Let me know if you've been participating. That's been one of our favorites and actually gave one of the most concise signals. Of course, it has to happen on a day we don't meet. Anyways, all right. Apple overextended. Needs a consolidation. So Apple consolidating down here to 154, right? The market's going to drop, but if it only comes to here and turns, and if Apple turns on a higher low, that absolutely increases my expectation that the market is going to turn on a higher low, and I have to be ready to adjust my trading accordingly. Adobe looks good. Someone gave us Adobe after earnings. It looks good. It looks overextended. It looks like it's giving it back. If you were in a trade on this, I'd be thinking, yeah, your sign is calm, right? It's not engulfing, but it is a dark cloud cover that you do have a pinch and a turn on the stochastics. It definitely has the look like it's, maybe going to pull back, but it might not pull back for long. Again, technology is the place where we're most comfortable looking for bullish trades. Communication services second most, and then keeping an eye out on some industrials and some consumer discretionary. ADI, it looks bullish and it looks overextended, but it also looks just a little grindy, right? It's just grinding a little higher. Archer Daniels still looks bearish, and that looks like it may be ready for another bearish trade if you are on the lookout for bearish trades. AMD. Yeah, look at that. I mean, it gave the signal here. It moved, it paused, and then pop again. I still think, this is all the same move here, but some people might think this is your entry. I wouldn't argue if they said this is what I'm trading, this little pennant, this little consolidation, and it's now breaking out with volume. Okay. If they're looking for something like this, that's going to put this thing up here around, 104. I'm not as much of that. I would rather wait to see if it comes back down to 90 and turns, then gets here. That's a 3-to-1 versus 1.5, 2-to-1 on a breakout. But if you said to yourself, I like it, I'm trading it. Let's see what Stella thinks. She's got to be bullish on this one, I would imagine. Yeah, look at that. Ooh wee. 120 for Stella. My goodness. That's been our favorite, right? That has been our favorite. That and NVIDIA. So we're not surprised. Amazon has been on our list. It did give a little bit of a consolidation and a turn. That wasn't enough for me. I'm still kind of thinking it's the same, right? The same consolidation. But it is interesting, right? You cannot argue that it is a very, very interesting looking chart. AXP doesn't look good. I'm not willing to go in. If I'm looking for anything in financials, it's still bearish. That looks like a dead cat bounce to me, right? Like it's just sputtering its last breath, and then coming down. Boeing, yeah, I don't like Boeing. We thought Boeing might try to give something there. I think that looks down. BABA, Chinese stocks, continuing to demonstrate why I'm not a huge fan. Caterpillar, love it. Carmen has been pinging me saying Caterpillar looking bearish. 100% agree. Classic. Look at that beautiful looking signal. Now you don't have your stochastics, but when you're going bearish, it can be hard to wait for this thing to confirm. You have a nice strong move down, a little bit of a bear flag. It's rolling over. And if we go ask Miss Stella, whoops, what does she see on Caterpillar? Like I said, if you're bearish, you have plenty of signals showing up. Oh, goodness gracious. Beautiful. Beautiful. Magnificent. Everything's in place for that. I agree with your comment about patience, Carmen. Well done. Well spotted. So yeah, there are definitely some bearish signals that have set up, including the potential higher low on the VIX, which is an overall market signal. Okay, let's keep going. Same kind of a thing, right? Oil, energy doesn't look good. That looks like any day that could be rolling over. It's not quite as developed. That's still going up on your stochastics. It's only a little into yesterday's body, but not like through it or even beyond halfway to the downside. Costco. So I like Costco. Here's what I would say about Costco, and this is promising to find, maybe some retail, some consumer. This was the line of consolidation here. We clearly got above it. Nice little piece of volume to come. Now we've got a higher high. What are we looking for? 480. Bing. 480. Loving it. I will be patient. I like Costco. I would like to see something along those lines. DBC looks very, very bearish, just like oil, all energy right now. John Deere looks bearish. Boeing looked sideways to bearish. Caterpillar looks bearish. Deere looks bearish. So I don't think it's going to be industrials. Not if all the leaders are crapping out. It's got to be retail or nothing. And if it's nothing, that starts to support the possibility of a corrective type behavior. I don't necessarily think if the Fed says they're done, they handle the banking crisis, employment's pretty good, I don't think we would see a bear market resume. But again, open to it. DIA looks bearish. Disney looks bearish. FCX looks bearish. A lot of things look bearish. FedEx gapped up on earnings, seems to be holding on. There may be more downside, but good earnings. FXI looks mostly bearish. Gold looks bullish. Pretty strong reaction in gold. Goldman looks bearish. Again, financials. Financials, industrials, maybe even a little consumer non-discretionary. I know that ADM looked at. I would say those are the candidates bearishly. Bullishly, the candidates all look like they're overextended, right? So yeah, this definitely feels like a market that could take a little dip to me. IWM looks bearish. Jets looks bearish. MasterCard, somewhat. Meta looks bullish, but looks bullish, but is overextended and needs a consolidation. And then, okay. So Marvell, not as strong. Microsoft looks bullish, looking for maybe a little more consolidation. Netflix, not. It's not Netflix coming out of communication services. Meta more than anything. NVIDIA looks great. Gave a signal back here. Probably, I know at least a few of you either traded NVIDIA or AMD, same basic signal. Managing that for profits now. Oracle, flat. QQQ, overextended. Starbucks. Oh, Starbucks, you look a little bearish. Silver, bullish. Semiconductors looks fine. S&P, again, trying. It's a lower high, so but this is a setup that I think could go either way, depending on, first and foremost, tomorrow. Looks like we were moving into C territory, actually. First and foremost, tomorrow, and then what we see for the next 7 to 10 days afterwards. Target looks bearish. Tesla doesn't look good. UNG down. Visa not good. So interestingly, the VIX is kind of holding up. The VIX is up 1%, even though the market is down considerably. Very odd. Very odd. We'll talk about it on Friday, what we ultimately think that means, but that is odd. I would have expected the VIX to be down a little bit more from here. QQQ, overextended. Starbucks, no, I already did that. Where was I? Target, no, that wasn't it either. Visa looks a little bearish. The VIX, interesting. Financials, obviously, looks like trash. Industrials, looks like trash. XLP, stabilizing. XLY. Okay, so discretionary. I think discretionary, it's definitely not industrials. Industrials doesn't look good at all. Whereas, let's go look at a bearish trade for a minute. Whereas this one definitely has moved enough to be like, okay. Now, even if this one, I just kind of drew that line. I mean, if you drew yours differently, you might end up here. But even if it comes down, my area would be like this. I don't want it to get that close to down here, but my thought is if this thing comes down in here and stabilizes, this turns like that, that is absolutely going to be, for me, an indication of the third participating sector. Then we will have technology, technology, communication services, and consumer discretionary, those three. Okay. That would do it. That would cover it. Now, let's talk about a trade real quickly. So the VIX would confirm tomorrow, but you might be getting signals now that you're willing to take. So, for example, let's look at Caterpillar. What do we know about it? Volatility is not bad. That volatility is pretty low. And if it drops hard, then the volatility is likely to spike again, like it did here. So it could spike from 33 up to 45. If that happens, what do I want to be in? I don't want to be in a spread. If I have a spread, I want the volatility to drop. If the volatility is going to rise, I want to be in an option. I want to be long Vega. I'm long Vega when I buy an option. So I would definitely be looking at this at buying a put, right? I would think, okay, what are we thinking about this trade? I'm wrong if it gets up, let's say around 227. Let's play with these numbers. Let's just play with the numbers a minute. So 227 on one side, not a lot of room. Tight stop. If I'm wrong, I'm wrong. If it breaks back above these highs, I'm out of here. Ish. Maybe even 228. Maybe we give it a little more room. Downside, what am I thinking? I think we fill this gap. I think that puts us at 200. Okay. So we'll go 228 and we'll go 200. And I mean, we don't need to go this far, but we can. I'm gonna go out of the monies. I'll probably end up at 210s. Whoops, nope. Two contracts, nope. We might even just do one. Let's give it a weekish. Yeah. It's got a great reward to risk ratio. 200 to a 900. Yeah, let's put this on. We're going to add one of these. Let me see what this thing is. How much time do I have? 3 minutes. Couple hundred of risk. Caterpillar. A little bit more expensive than that now, actually. Let's say 405. I think it might get a little upswing tomorrow. If we paid $350 for this, I'm going to let it ride for a minute. I'm going to put it in, try to see if tomorrow it opens up a little bit, and then we'll go from there. But look, you can see the current setups, if anything, are bearish. The VIX has escalated. There's a banking situation happening. There is plenty out there to support the case for bearish trading. If you trade bearishly, make sure you know exactly when you're wrong and exactly what it's going to take for you to shift and be ready to go the other way. I think this is the kind of market where we may do stop and reverses and change our scenario rather quickly. So there you go. Let me know if you have any questions. Let's go see who's going to win today's coveted prize. It's not looking good. Oh, the C's. The C's. Bill asked what Stella's smoking, and he was not wrong. He's like, this is clearly dropping. Bill, well done. We didn't have a lot of participation today. Numbers are down. The market chops around and people kind of check out. This is the market you want to really be like focused. You don't have to have a lot of risk to be focused, right? Like we can come talk about it, make sure that you're staying engaged with the market. So, don't check out. Puts, April 310 puts, I believe is what it was. Raymond. April 210 puts, but I was looking to get a little better price. So, letting it, and Carmen was a C as well. All right. We'll be back on Friday. Here's the deal. If we get confirmation tomorrow, we'll talk about it Friday and possibly look to put some trades on based on Thursday's confirmation. And then we'll go from there. Yeah, it's still a market that you got to be careful in. So what do? Be careful. Hope you have a wonderful day. Enjoy your Thursday. And I will see you Friday morning for coffee. Be there, be square. As always, happy trading.